Hustle, hustle, hustle hard. Hustle, hustle, hustle hard. Hustle, hustle.
All right, guys. I am Marvisha Singletary. I'm an educator here at the Wealthy Hustler Institute. I am so glad to finally be doing a voiceover for you guys. You guys know education is super, super, super important to me. So I have to make sure that I am doing my best part of giving you all of me regarding this course. Okay, so let's go ahead and get started. All right, in this course, we're going to cover what is Forex, what is a PIP, what are lot sizes, what's traded in the Forex market, right? We're also going to go over the time to trade Forex and a couple more important things that are very, very, very important for you to understand. All right, so let's get straight to it. Forex is short for the foreign exchange market, right? I know you guys probably hit us a lot, right? $6.6 trillion a day. That is not a myth. That is the absolute truth. Okay. It is the largest financial market in the world, meaning you guys don't have to try to get rich overnight. Okay. It's open 23 hours per day, 5 days a week. So, mind you, I said the Forex market is open 23 hours per day, 5 days a week. Now, the crypto market never closes. All right, so the best time to trade Forex is during the session overlaps. So we have 4 trading sessions. We have the Tokyo, the London, Asian, and New York, right? Now, the London session starts at 3 a.m. and it goes all the way until 12 p.m. Eastern Standard Time. Tokyo is at 7 p.m. to 4 a.m. New York starts at 8 a.m. to 5 p.m. Asian is 5 p.m. to 2 a.m. Now, as I said, the best time to trade is during session overlaps. So the London and the New York session overlap at 9 o'clock. 9 o'clock. So you need to be up and making sure you are ready to enter trades at the very least at 9 a.m. Okay, guys? It's also one of the most lucrative times to trade Forex pairs. All right, so what's traded in the market? So lots of people like to ask me, like, is Forex just Forex, or is Forex stocks? Or let me clear it up right now. You can trade Forex pairs, which is what we have on the screen. This is an example of a Forex pair. This is GBP USD, which is also my favorite pair. So a Forex pair is when you have one country's currency paired against another country currency. So like I said, on the screen, we have GBP USD. GBP is the Great British Pound versus the US dollar, right? So that's Britain versus the US dollar. Those are the countries that we are trading against, right? I'll give you another example. We have AUD USD, the Australian dollar traded against the US dollar. Those are Forex pairs. Now, we also have energies. So we have oil, US oil, UK oil. Yes, oil is gas. The gas that we buy to put in our cars. Yes, that's that. Metals. Gold, silver, platinum. Yes, those things that people find in those hidden caves and stuff like that. Yes, those are metals. We trade those. Okay. Stocks. Yes, the same stocks that you see on Robinhood and Webull. Yes, we can trade those stocks. So let me tell you a little bit what's a little bit more different about the way we trade stocks on our platform MetaTrader 4. When we trade stocks on our platform, we are trading the actual profits that's made off of those companies. So in a nutshell, we make a lot more money, a lot faster trading stocks on MetaTrader 4 than you will on Robinhood. That I'll get into a lot later. And then we also have cryptos, which you guys may know is Bitcoin, Ethereum, Litecoin. Those are some cryptos, and then indices. For those that are very new, you may have heard of the Dow Jones. That is also known as US 30. Yes, that is the index. It moves very fast and it'll make you a lot of money. You may have heard of the NASDAQ, also known as NAS 100. Moves very fast. Will pay your light bill money, your rent money. It will do all of that for you in one single trade. Again, we will have special information to help you guys master indices, because indices are very fun, but you need to have a certain level of discipline when trading indices. Okay, and then last but not least, we have the S&P 500, which is now is known to us as SPX. So again, it's an index. It's a baby. It's the baby of the indices, but it does make a lot of money, and it will be very good to you. All right, so we just went over some things that can be traded in the foreign exchange market. So here I just kind of list some things out for you guys. I want you guys to be able to actually see, what is she talking about, right? Because not everybody is as curious as me. When I first started trading, I was very curious. I was exploring everything, right? So I wanted to kind of explicitly tell you guys exactly what can be traded for your records. I want you guys to be excellent traders. I also gave you guys a list of pairs that are moving and when is the best time to trade them. I hope each and every one of you say this to your phone because this is super crucial to your trading journey. All right, a pip. Some people may ask, what is a pip? A pip is an acronym for price and percentage. It is the measurement of money. So in the example we have on the screen, the pip is the fourth number in price. It measures the distance that price moves, right? So think of pips, like a football field, right? You have to move so many feet towards the touchdown and so many feet opposite of the touchdown, right? So for example, one pip says that price moved from 1.35361 to 1.35371. That is one pip. One pip. So I want you guys to really understand this, because this is super important, because pips are weighted differently based on what you're trading. You guys may not have known that, but I hope you take that little nugget and put it in your toolbox, right? So let's just say price moves 10 pips. Well, now instead of it being 1.35361, it is now 1.35471. Right? So because that threes place is like the tens place, right? So I hope I gave you guys some clarity on that. That is a pip. A pip is, like I said, it is the measurement of money. Think of it like moving distance on a football field. Okay. All right. So here's another example, just to kind of give you guys some little bit more clarity on how to count pips. And we will be doing trivia games, because guys, I love trivia. We'll be doing trivia games on making sure you guys understand pips. Okay. So here's a great example for you guys. Do not rush through this course. It is not a sprint. Lot sizes. These are very important. I have a lot of people that don't quite understand lot sizes, and they don't tell me until I hear them keep crying about not making money, right? So let's get this down. We have a micro, a mini, and a standard, okay? So I've given you guys some examples and what you're risking per pip. So with a micro lot, it is the smallest lot size, right? So a micro lot is 0.01, says I'm risking a dime, not a penny. I'm risking a dime. Okay. So if that dime moves 1,000 pips, you have just now risked or made $1 per pip. So 0.10 is $1 per pip. It's a little bit of unlearning things we have to do when we learn trading, because a lot of us would see 0.01 and say, that's a penny. In trading land, it is not a penny. It is a dime, okay? And so on for the mini lot. We have 0.1. That is $1. If it moves 10,000 pips, you have now risked $1 per pip. Okay? All right. So more information for you guys on understanding lot sizes. I really wanted to kind of hit hard on this, because again, I see a lot of you guys that don't quite understand this. And guys, if you are reading or listening to this I want you guys, feel free to ask me questions in the comment section on our app, on our Gumroad app, because I do see them and I will answer them for you guys. All right. So again, more information on pips. All right. All right. So here are some terms that you guys want to make sure you know regarding trading: a spread, a bid, ask, price, free margin. All these are terms that you need to know. That people might not necessarily tell you because they kind of expect you to know, right? But luckily, when I first started trading, I did get this information and I'm sharing it with you all. So a spread is the difference between the bid price and the ask price. Okay. So bid is the buyer's price, the ask is the seller's price. Okay. So understand that when we're trading, we have buyers and sellers coming in, right? They're both fighting to take control of who's going to have domination over this swing, right? That's what they're fighting for. That's really what's going on between those candlesticks. Okay, now we have margin, which is a portion of the balance traders are using to trade. So, for example, if we go to our MetaTrader 4, we have, let's just say in our account, we have $300 and our margin is at 115. That is the amount of money you have left over. I'm sorry. I don't want to confuse you guys. That is the money that you are currently trading with. So out of $300, you are currently trading with 115. That's how much you have currently thrown into the market. Now your free margin is the money available left for you to trade with. So where you have free margin, it says it'll usually have a number right there. You do not want that number to get below 70%. Specifically, your margin level. You specifically do not want your margin level to get below 70% because it will margin you out, meaning that the broker will close the trade for you and you will not like that. So be very careful when it comes to your lot sizes, guys. All right, guys. So I wanted to give you guys a visual on bid and ask. Hope this is very helpful to you all. Trading, I always encourage for discipline. I had to let you guys know this because this is very important. You will learn a lot if you actually remain a student.